Hello folks, this is Naeem Aslam, Chief Markets Analyst at AvaTrade. Happy Friday and welcome to our daily fundamental video analysis. In economic news, what we've learned from the data which has been released today and of course yesterday with respect to the UK is first, during the lockdown, the GDP has contracted over 2%. So now we are sitting in negative territory. Obviously, that is a contraction or what we call a recession. Secondly, the debt to GDP ratio, the number which came today, it has climbed to its highest level. Pretty much so. But there was some silver lining, and that came in its retail sales number, because the actual reading came in at 12% when the expectations were for 6.3%. Obviously, this is an enormous boost with respect to the retail sale, and this data is expected to continue to improve as we continue to move forward. Now, what is the reaction of this data on sterling? Well, first of all, yesterday the Bank of England kept its monetary policy unchanged with respect to its interest rate, but obviously it increases asset purchase program by another 100 billion. Again, that was very much expected in the market. The initial reaction, as you can see, for sterling was to the upside, but then it started to fade away. But nonetheless, as you can see in the chart for the sterling dollar, the trend is still skewed to the upside, with a room open for the price to touch and go well beyond that 1.27 level against sterling, against the dollar. Now, what does that mean for FTSE? Now, that is a very intriguing situation, because when we look at the FTSE 100 chart from a weekly time frame perspective, what we see on the weekly candle is that yes, we are well above the close that we've experienced or that we had from last week on a weekly candle, but we have made another lower low. So if this was the low for last week, this is the low for this particular week. Now, this obviously makes me a little uncomfortable, despite the fact that we are well off from a recent lows which were formed during this week, and given the fact that we are well above the last week's close as well. But we wanted to see the momentum, the nice flow, another higher high. Perhaps we can see that next week, but if it doesn't, then I think we are really looking for some sort of a retracement for the FTSE 100 index. Now, with respect to the US indices, yes, we have seen enormous amount of a rally throughout this week. Yes, the S&P 500 index is still holding on to gains which are larger than 2.4% for this particular week, but as you can see in the chart, the Dow Jones index on a weekly time frame is really struggling to keep its upward momentum. The reason that I'm saying this is because the Dow Jones index has failed to go above the 200-week moving average, and now it is in constant battle with its 100-week moving average. Let's see how we finish today, but it would be good if we can get a close above the 100-week moving average. Now, of course, S&P 500 index is a much better, much wider representation of the stock market. The momentum over there is very strong, is still skewed to the upside, and that just sort of gives more hope to the bulls that yes, this momentum may continue. But from the market breadth perspective, which you can learn a lot more by going to our website in our daily analysis, I think the momentum from the market breadth perspective, it has changed, and it's changed in favor of bears, not for bulls. That's all for today. See you guys next week.